ladies and gentlemen, and today we will present you the analysis of stock market activity during the crisis. Let me introduce our team. It's Sergey, Andrew, and me, Gauhar. And let's go straight to the topic of our presentation. First, we will mark some pre-crisis tendencies. Then we will show the stock market activity during the crisis. And then, finally, pay attention to the new tendencies.
In the 21st century, first 7 years, Russian financial markets was in relatively comfortable conditions. After the restoration of market liquidity, almost destroyed by the crisis of 1998 and some changes in legislation, all experts marked strong growth in market capitalization and number and strengthening of exchange infrastructure.
Yes, it's very informative, but sometimes it's too hard to understand such information. Now just imagine, it's 2007 and you have some free cash, about $1,000. Interest on bank deposits are too low, that's why you prefer to pay attention to the stock market.
You've heard that the last 2 years were really extraordinary time for Russian financial markets. All experts marked great growth in market capitalization and number of global players and number of other investors. You examined two major Russian stock holdings, Mitex and RTS, and you can see that turnover rose more than 10 times. Moreover, you can see that on markets a lot of other foreign investors, reflecting that Russian markets are more attractive for foreign capital.
And now you're absolutely sure that your money will be safe and you buy some shares. Till 19th of May 2008 you see your shares rising in price. But this day Russian stock market indexes began falling.
Anxious, you catch up the latest news that the dynamics of Russian stock indexes didn't really differ from the dynamics of global stock indexes, just because Russian crisis was only a part of general crisis. The situation lasted for 2 months and till mid-July, and during this time different stock markets lost a bit more than 10%.
Still looking for the bright future, you don't sell your shares. And in mid-July you found with the horror that the RTS index fell by 5% in 1 day.
The continuation for the collapse became Russian-Georgia military conflict. You open your favorite business magazine Newsweek and read the following. After the conflict, Russian stock market suffered one of the biggest downfalls in quotations over the last decade. In less than 2 months, it fell by more than 50%. The apogee fell on 16 September when, because of the uncontrolled collapse of quotations, Federal Financial Market Service was forced to stop trading. And according to RTS index, at the end of 2008, your $1,000 transformed in less than $300. And let us show the typical situation for 2008. Very informative. Okay, we won't show this.
Surely you didn't expect such results and you asked a question. I'm a well-doing taxpayer, and so why my government didn't protect me? Did they do anything to avoid the crisis?
Yes, they did. Russian government gave more than 170 billion rubles to restore stock markets. Many analysts think that such measures can help to reduce panic and to support markets. But all these funds were spent in relatively short periods of time, and it didn't affect the crisis. Russian President Dmitry Medvedev found a great mistake in the maintenance of financial markets. Spendings of public finances couldn't affect a demand on Russian stocks. because Russian stock markets are more responsive to the good news from global playgrounds and other economic indicators.
It's clear that nothing could save your money. Remember that you live in Russia and you understand that everything could be even worse, like it was in 1998. And now you still have about $300. Maybe it would be better to put it in foreign stock markets. To find it out, you carry out your own analysis, and the results are disappointing.
Yes, it's true. 2008 on world stock markets was very unfortunate. Nearly all major stock indexes has fell, and then we can see that enormous losses of Merrill Lynch and Citigroup, and the data on inflation in the USA, which was the highest in the last 18 years, contributed to market failure. Better focus for the economy demanded by the US government some useful actions, and they decided to decrease the discount rate, first by 0.75 percentage points, followed by another half percentage points up to 3%. Meanwhile, negative sentiments continue to dominate on European markets. Large losses of banks and insurance companies caused by investments in mortgage caused huge capital outflow from different stock markets. In order to stabilize the situation, the US Federal Reserve decided once again to decrease the discount rate up to 2%. Yes, a short positive effect was achieved, but the situation hasn't changed dramatically, and soon the decline continued.
You found out that according to National Bureau of Research, the United States economy is declining since 2007, and this is the longest period of decline since the Great Depression.
And what about emerging markets, islands of stability? Well, hope that emerging markets can avoid the fate of developed markets wasn't justified. The problems of developed markets only drove the capital flight and decrease of main financial indexes of emerging markets. For example, you can see the index MSCI emerging markets fell more than 50%, but while the 2007 it was rising.
It seems that it wasn't a good time for investments. At the end of 2008, you decided to sell your shares and return your $300. That's enough, you say. No more stock markets for me.
But the appearance of first signs of recovery returned the appetite of investors for securities of emerging markets. And already in the first quarter of 2009, most stock markets went to demonstrate positive results. And already in the first half of 2009, all stock markets went into a green zone. Moreover, Russia takes the first place and shows the highest growth rate. As we can see, RTS index in a year added more than 128%, and Russian MI6 index increased in 121%, which corresponds to the third place.
According to some investment companies, there were fears that the stock markets are rising much more faster than the economies. And when the biggest company of Dubai, the Dubai World, asked investors for postponement, such concerns increased. Moreover, some experts think that some markets like China and India will be the next Dubai, but according to the other analysts, it will be only isolated problems, but not national crisis.
But in general, it seems that the majority of investors doesn't fear of the second wave of crisis. If the economy grows, securities also must be purchased.
Let's point out results of our research. A recession occurred in all developed countries. A financial crisis went into collapse in all sectors of the global economy. Throughout the world, people were losing their jobs, companies closing down, wages reducing, living standards falling.
In Russia, the crisis also affected the financial and the real sectors. In 2009, Russia's stock market was the worst of all developed and developing countries, and lost more than 70%. Moreover, some major banks had been bought for a symbolic amount, and ruble fell against dollar and euro. Of course, government took some measures to stabilize the situation, but such as investments to Vneshekonombank, however, that didn't justify hopes.
It is significant that nowadays Russian stock markets show praiseworthy results, taking the first place in the whole ranking. Investors seem to gain the confidence, and we can see that this is the first step of the way of revival. Thank you for your attention.